is there some way I can invest? I think I've asked you to invest every time we've talked about this.
It's got to be in the top 5 list of most boring companies you could possibly start.
I was kind of surprised at how fun mortgages actually were.
I got the value proposition immediately. Like when you guys shared what you're doing, I was like, you're going to have a flood of people the moment people know that you exist.
If you're maybe doing something only 5% unique compared to what else is out there, your execution and your operations better be better than 95% of other companies in that industry.
Who is John Galt? Hey everyone, my name is Caleb Williams, and this is a very special episode. I have Tim and Mitch here, and they have a very, very special announcement that they are going to be sharing for the very first time publicly on the BetterWealth show. And so without further ado, gentlemen, welcome. And what is the big news?
Well, good morning, Caleb. Thank you for having us on. It's actually pretty simple. We are starting a mortgage company, and the name of it is John Galt Mortgage Company.
I love this very much, and it's one of the things that I've been learning and talking, especially to you, Tim, about the backstory of why you guys are starting this and the business model, and I think it's brilliant. So without further ado, I want you guys to share the story, the backstory, why you're doing this, what the competitive advantage is, why the name, and so much more. And again, it's an honor to have you guys on the show, publicly releasing this for the first time.
Yeah, Caleb, first I have to say you look great in that sweatshirt. It looks great. So
beautiful color.
The first context I want to add, and then I'll probably turn it over to Mitch to honestly do most of the talking about this is something we've been working on for almost 5 years now. It's really 4 years plus. So a few people, like I can count all the people that have known about it essentially on one hand, but it really started in like mid 2019 that we started having discussions around starting a mortgage company. It started actually as a real estate brokerage, and the more like R&D and questions we were asking, the more that we looked into starting a real estate brokerage, we kind of realized like it's just not a super interesting business model. And we didn't feel there was any valuable ways to innovate the business model that hasn't already been done, and we didn't want to start something just for the sake of starting something. Like if we did something big, we wanted to feel like we're really innovating and like disrupting the industry in a meaningful way. And I fully can appreciate how just bro that sounds like, hey man, we want to disrupt the industry, but they're obviously like the world doesn't need another real estate brokerage. The world doesn't need another mortgage company. It's not like people are going throughout their lives thinking, you know what, if someone could just start another mortgage company, the world would be so much of a better place. Right. And so if we did this, we wanted to feel like we were adding something new to the conversation, like kind of making a tweak on the business model. And so what started as like, hey, let's look into a real estate brokerage. Once we learned more about like what are the margins of real estate brokerages and what are most of the big players doing and what are the new upstarts doing, it kind of just became clear like it's just not super interesting to us, and we didn't feel that there was a clear path forward, I guess, to do something interesting with the real estate brokerage. But then we started researching mortgage, which honestly is more boring than a real estate brokerage, right? Like it's got to be in the top 5 list of most boring companies you could possibly start is a mortgage brokerage, right? It's not sexy like a software startup, or we're not trying to compete against SpaceX and go to outer space or something. It's a mortgage brokerage, right? But the more we looked into it, we're like, there's actually some really cool things we could do with this from a business model perspective and saving people a lot of money compared to what the status quo is now when they get a mortgage. And then the more we talked about it again over this 3-4 year process and kind of tossed ideas back and forth and went to mortgage conferences and talked with top producing mortgage brokers about like what they're doing and what the business model looked like, we kind of also realized like we could start a really cool brand here too. It doesn't just have to be the Tim Mitch Mortgage Company, like we could actually have a really meaningful special brand. I mean, this conversation could go so many ways at this point, but I'll just end this rant by saying it's something we've been working on diligently behind the scenes for 4 years, and finally here in 2023, we're excited to announce on the BetterWealth show that it's a go. It's live. We're licensed. We're actually have several deals under contract right now, and we can't wait to share this news with the world.
So a couple things. I want to take a step back because we met through a different company of yours, Platform Marketing.
Yeah. Yep.
And you talk about identity, you talk about culture, you talk about great apparel. You have always taken that very, very seriously. So why don't you explain, for a minute what that is, what makes that because the world doesn't need another marketing agency either. And you had a very unique model that's been very successful. And it's given you kind of an inside track of like how this whole industry works. And so that will give us a little bit of context to why the pivot.
We started with a marketing agency actually nearly 10 years ago now is when we started Platform. And Platform is really just a social media marketing agency for realtors. So it's like a traditional ad agency where we manage all your ads for a monthly fee. We edit our clients' videos. I mean, we script the ads for them, and that's across multiple social media channels, Facebook, Instagram, YouTube. We're doing some ads on Google now, website, content creation, things like that. So it's a full-blown marketing agency, but it specializes in working with realtors, right? Where a traditional ad agency, obviously, you'd take any client who came in, whether it's a pharma company, an auto manufacturer, sporting goods retail store, cosmetics, whatever, like any client who contacts you, we can do marketing for you. We kind of took a different route and said, hey, let's only work with real estate agents. So that focus over the last 10 years has really built up a lot of institutional knowledge for us of learning how the real estate industry operates and what are the challenges and opportunities, I guess, in that world of residential real estate. So our clients are like individual realtors with Platform Marketing. And that's how Mitch and I got connected. Mitch, when did we first meet? Was it 2014?
It was like 14.
Yeah. So it's
Ron Paul bringing you guys together, I believe, right?
Yeah. So there's actually a pretty cool story coming full circle, but a guy named Isaac Morehouse introduced us back, I think it was back in 2014. And Isaac is the founder of Praxis, which is one of our favorite companies. It's basically
we'll get to all that.
Yeah. So Caleb, you're like, hey, this will probably be a 45-minute podcast. Like I was thinking, if we can keep this under 3-4 hours, that would be great. But Praxis is one of our favorite companies. It basically allows young people to go get a real world education, get a job somewhere, and graduate this program with a full-time salary job offer. Like most kids coming out of Praxis are making 50-60 grand a year with zero student loan debt, and they're 20 years old. So really cool business model. Isaac's the founder of that. He introduced Mitch and I, and nearly 10 years later, guess who's the very first customer of the John Galt Mortgage Company, currently under contract to buy a house? Isaac Morehouse. So it's just one of those things where it's like totally random.
It's serendipitous. He didn't wait to buy a house for us. It just happened the way it happened.
Yeah. It's almost just like a sign to us, like, okay, like this is what we're meant to do. Like this is going to work. It's just a sign from the heavens that, this company was meant to be. Right. So
yeah,
Mitch and I, got connected with Platform apparently nearly 10 years ago. At the time, Mitch was working for a marketing agency in South Carolina, and he was selling what's called like an authority marketing package. And so he and I were friends, I think, on Facebook for a couple years. And I just realized, man, we have so much in common. Like we're, both into sales and marketing. We both obviously understand real estate. At the time, Mitch was licensed as a real estate agent. His brother and sister-in-law are top real estate agents. And so the more that we were Facebook friends, I realized as Platform started growing, I realized I needed to hire a full-time salesperson, because like I shouldn't be running the company, doing the marketing and doing sales full-time. Because as any entrepreneur knows, like if you're doing all that yourself, one of them is going to suffer, right? Like either you're doing 100% job at one thing, or you're doing a 60% job on one thing and a 40% job on the other thing. And so I reached out to Mitch probably 2016, I think, is when we started talking, and you officially came on board a platform, I believe, in spring of 2017. Is that right? And so he left this company where he was selling authority marketing packages. And Mitch, I'll actually just defer to you here so you can share kind of what that was that you were selling, because I think that tees up a lot of what platform became.
Sure. Well, it was really simple. They were essentially like a hybrid book publisher, so like a self-publisher, but they would help people write and publish a book that they would then use, like entrepreneurs, that they would then use as a marketing tool to grow their business. So that is very applicable to a wide range of entrepreneurs, particularly like solopreneurs. Financial advisors were tons of our clients. The company was Advantage Media Group, and they eventually created a co-brand called Forbes Books while I was there as well. And so that was the company that I got joined with after I did Praxis, or as a result of doing Praxis. And I was there for 3 years. And I mean, all due respect to Adam Whitty, who was the founder and CEO of that company, it was an unbelievable opportunity that has been paying dividends ever since. But it wasn't the right thing for me anymore at the time when Tim started talking to me. But it was a really cool experience to be there for my first kind of real job after waiting tables for a few years. So,
and Tim, one of the things that separates Platform is you guys do something very unique. You only work with one realtor in one region, and so it's like there's built-in scarcity to that. What was that?
Well, so that's one of the things that I loved most about making that move from Advantage, which was a wide range of businesses, to platform marketing, which was one vertical, and it was exclusive in the market that client was in. So it's like we can apply these authority marketing skills that I have, been consulting about now for 2 years, 3 years, and we can apply that to one agent pragmatically, realistically inside their market. And I'm like, well, this has got to work. There's no way that this couldn't work. And years later, it's, we've got 215 plus clients around the country. And I mean, it's crushing. Like, it's just an amazing company.
You guys have an incredible company, an amazing culture. You guys do some incredible, like I've had the honor of speaking at 2 masterminds, and it's been some of my favorite events to be at, because it's like everyone, like there's just a higher like echelon of a human being, and I think that's because you guys very much attract like good people in your group. In every great business, you need to almost have like a home run from a standpoint of unique selling proposition, or like what is the offer? Are you guys providing massive value?
There has to be something unique about your business model if you really want to build like a truly successful company that lasts. You have to be doing something at least a little bit unique. There's, maybe some companies can just have amazing execution and they're not doing something super unique, but I feel like it's basically a relay race where at the end of the day, you have to get to the finish line. The number has to equal 100. So like if you're maybe doing something only 5% unique compared to what else is out there, your execution and your operations better be better than 95% of other companies in that industry. If you're doing something that's like 95% creative and interesting, then maybe, your execution and operations can be more like 5%, right? But at a certain point, like you have to have at least a little bit of like originality to your business model if you're going to stand out. And so what we thought was so interesting with Platform, and is still true to this day, like 10 years later, is that every other company in the industry was concerned about themselves and their growth and not what was best for their clients. And I have to be really careful the wording I use here, because I hate when people say, oh, it's all about putting people before profits, man. And that's kind of like the hippie thing to say now in business circles, is people before profits. And I just completely disagree with that. I think if you want to serve people, you should focus on long-term profits. And then again, it's the same way of saying the best way to maximize long-term profits is to focus on serving people and not worry about short-term profitability. And so that's what we did with Platform. We're like, hey, let's not concern ourselves with our own growth and exit strategy. Like how big can we build this before we sell it to a private equity company or some, investor, or maybe a public company like Zillow, right? Let's just build an awesome company that we plan to hold forever. And there is no exit strategy. So with that premise, then what we decided to do is, well, every other marketing program for realtors out there, so Curator, Ylopo, Boomtown, Sync. I mean, there's loads of companies that are kind of competitors to us. And I know a lot of your listeners probably have no idea what any of those companies are, but these are very large companies that have thousands, actually even tens of thousands of users. And many of them are owned by private equity companies now. So they're doing, their annual revenues are in the tens of millions to even $100 million plus dollars. These were our competitors, and they work with an unlimited amount of realtors. So let's say you're in a mid-sized city like Knoxville, Tennessee. It's not like LA or New York City, but it's also not a tiny small town. So Knoxville, Tennessee. Any of those companies I mentioned, they might have 10 or 20 agents or 30 agents working with them in Knoxville. So we kind of thought, well, by definition, if the goal of marketing is to build a brand for yourself and stand out from the competitors, like the whole point of marketing is standing out, right? I can't really ethically or, look a real estate agent in the eye and be like, our company is devoted to your success. Oh, and the 24 other agents in Knoxville that we're working with, right? Like that just seems incongruent to me for a marketing agency to say that. Now, a software company is different. If you're just offering a website service, like, well, Apple doesn't care how many people have, an iPhone or use iCloud. It's not like, hey, only, one person in Knoxville can use iCloud. It's like, well, who cares, right? But in a marketing agency, it's a pretty specific type of business model where the goal is that your client comes first and their success comes first. So like if you were a big ad agency and you were working with Tesla, right? Like you were the ad agency of record for Tesla, you wouldn't also secretly be courting the business of Rivian or GM or some other like company trying to build electric cars. That would be a complete conflict of interest, right?
Yep.
And yet that was basically the status quo in the industry. Is every other company was like, hey, we work with an unlimited number of agents. There might even be an agent in your office, like one cubicle down from you that we're working with too. So I just felt that was really weird. And so we decided early on, let's only work with one realtor per area. So even in a city like Knoxville, it's like, well, we have one client in Knoxville, right? Not like 5 or 10, but one realtor we work with in Knoxville. And what that allowed us to do was create much more hyper-local, specific creative content for that realtor, because we didn't have to water it down and make all the ads and marketing campaigns so generic, because it's like, hey, this has to work for 20 people in the same city. So by definition, it kind of has to be generic, right? So it allowed us to essentially create better marketing when we put the client's needs first. And as a long-term result of that, we've built a company now that has 200 plus clients across the country. By the end of this year, I think we'll be probably closer to 250. On a typical month, we have net negative churn, which is basically unheard of for a marketing agency, which means that net negative churn means that we get more
and no contracts.
Yeah. I mean, this is a turning into an advertisement for platform. So I'll have to send you a check later, Caleb. But net negative churn from the perspective of a marketing agency means that we're getting more warm referrals every month than we have people quitting. So even if we have an advertising budget of 0, like we're not spending any money on customer acquisition or lead generation for ourselves, we typically are growing every month, even without spending money on marketing. Again, that is like unheard of for a marketing agency, because most marketing companies are playing this game where like they lose 10 to 15% of their clients every month, but they're hoping to make 10 to 15% sales. And so they're just slowly growing, trying to like tread water to replace all the people quitting. We never had that problem. And it's because we had this unique business model of, hey, let's not try to be the biggest company. Let's try to be the best. And I know that sounds super, super cliche to say. It's super cheesy to be like, let's not be the biggest, let's be the best. But it's absolutely worked as a business model.
Well, and how hard was it early on to literally turn down people that wanted to work with you, wanted to give you money, but you turn that money down, but that has been the identity and arguably why you guys have that negative churn. It's like you guys are great, and if someone ever wants to leave, there's a
That's
waiting list in there. So it's like you have
so
built-in insurance in your business model.
so Caleb, that's actually kind of a good segue to get back into the mortgage story. Because Tim brought me on to run sales and grow this company in 2017. And the more we grew, obviously we work with one client per market. The more we grew, the fewer markets that were available for people to take, right? And the fewer obvious markets, right? Because the larger, the metropolitan areas, those would get taken. And then the sort of not quite giant metro areas, they would get taken. And then the big cities would get taken and so on, right?
Because it
And
used to be
I
when
would,
we were making sales, like 80 to 90% of warm leads that would come in and be like, oh, cool, your market's available. We can get you signed up. And now
right.
it's
Well,
more
I got,
like 80% of markets are taken. So literally 4 out of every 5 leads we get that want to sign up, that are like, hey, I'd love to sign up for platform. Here's my credit card. 4 out of every 5 were like, hey, sorry, your market's taken. Would you like to be added to the waiting list?
And so I would get to the point where I'm replying to emails, and literally every day replying to emails. I'm so sorry, but that market is taken. And some people would still jump on a call, and then they'd want to get on a call and like challenge me on it. I've been told how stupid our business model is. That we only work, like, how could we possibly only work with one client per market? There's 10,000 realtors here, right? And I'm like, well, if you were the one client, wouldn't you be really happy about that, right?
Yeah.
And so we got to that point where that shift had kind of happened. The struggle of like building the company, getting it sustainable that had been beaten. We were on the other side of it. And it's kind of like, all right, well, what are we going to do now? And we thought about a real estate brokerage, like Tim mentioned, but that wasn't going to work for a few reasons. One being all of our clients were realtors. So
now, okay. Honestly, though, I'm gonna jump in here and say that like we've had many clients over the years tell us because they've enjoyed working for platform for so long. Because we have clients that have been with us for 5 years, 6 years, 7 years, 8 years. We actually still have the very first client we started working with 10 years ago to this day. Again, all these things for those in your audience that I guess aren't in the marketing agency world, having clients stay for 5 years plus or 7 years is unheard of. Like the average marketing agency in our space has a lifetime value of like maybe 12 to 18 months, maybe. Right. And we regularly keep clients for 5 years or 7 or 8 years. And so we realized early on that what we're doing is clearly working and people like this business model, so much so that some of our clients told us explicitly, like, hey, if you ever start a real estate brokerage, like if you ever start a platform realty, I will absolutely move over to platform realty. So naturally we're, entrepreneurial. We love the idea of a new business. It's just kind of an itch that you have to scratch. And so we're like, okay, let's look into this. But the more we looked into it, there just isn't a lot of margin and not a lot of things you can do, I guess, from the perspective of a real estate broker. And this is where I go down like a conspiracy theory rabbit hole of I think the entire real estate industry is a giant cartel propped up by lobbyists at NAR to ensure the existence of brokers as an in-between. Like I don't see why brokers are even really necessary if we didn't have laws saying that you have to hang your license somewhere. Like, because legally, I know more about marketing than 99.99% of agents, right? Like, I mean, I'm the CEO of a marketing company for realtors, right? It's what I do all day. But it would be illegal for me to take a listing and try to sell a house because I'm not licensed with a brokerage, right? So it's just a dumb, archaic law. Another example of government getting into our lives and trying to micromanage what we do. But brokers you have to have a broker, right? Only because a law exists that says so. So we tried to look at the real estate industry and be like, well, if we owned a brokerage, what could we do differently? And we kept coming up short of like, well, there's nothing we could do and still charge a fair commission split to the agent, that we think it's a win-win, because all the interesting marketing and stuff we would have to do, we'd have to be charging like a 70-30 or 80-20 split. And it's like, well, then there's not enough money left over to do anything interesting at the broker level. So eventually we thought, well, what about mortgage? And I think the point Mitch was making there was that with this one client per market restriction, there's kind of a built-in cap on how big platform was ever going to become, because eventually you start looking at a map, it's like, oh wow, all these markets are taken. There's all these dots around the US where we have clients. And so there's almost this built-in, all right, well, there is almost a finish line for platform. Like there's a point at which it doesn't really make sense to grow it any further. And so we kind of thought, well, if this company keeps evolving, or maybe we start a new company, right, which is what JGMC is. It's an entirely new, separate company. It would be kind of fun to build a company that has no limitation. Like there are no built-in constraints on how much we can grow or how many sales we can make. And so, Mitch, I'll turn it over to you here, but that's what.
Well, and I want to jump in real quick. The reason I had you guys share a little bit of platform is for a couple reasons. Number one, highly respect the business model. Number two, you have a raving community, and that's something, Tim, whether you know it or not, is like built into your DNA of like how to get people together and like build a movement. But number three, you have a very, very interesting way to think about business from a value perspective, and not just saying, not just saying all the buzzwords, but actually like putting thought into like, why would someone do business with us versus the competition? The reason I say that is when you shared with me what you guys are up to on the mortgage side, I think I said three things. I was like, okay, you guys are going to be massive. Is there some way I can invest? I think I've asked you to invest every time we've talked about this. And I got the value proposition. I got the value proposition immediately. Like when you guys shared what you're doing, I was like, you guys, you're going to have a flood of people the moment people know that you exist. And oh, by the way, this is the worst time to start a mortgage company. I didn't know if you knew that. And you guys are going to still crush it. So all that to say, I'll hand it over to you all. But like, I just like, that's why I wanted to set the stage, is like, I am so pumped about what you guys are going to share. And it's so intuitive in my brain that this is going to be a home run.
So I'll just wrap up that discussion of platform as we get into more discussing the realities and the things we're going to be doing with JGMC, the John Galt Mortgage Company. I'll wrap all that up by saying it was always like priority number one in growing and scaling platform, that we wanted to do it in such a way where the client comes first. And again, I am fully aware of how just like bro that sounds, like how just cliche of, oh, clients come first and do what's best for the customer, and all these companies that have like integrity on their mission statement or values, as if like that shouldn't just be an expectation that you operate with integrity, right? But most companies really don't think that way. I think most companies are more concerned with their own short-term growth, not the long-term viability of what they're doing. And so I think that's what's made platform very resilient, where even when like things went really south in the economy in obviously 2020, 2021, 2022, during all the COVID lockdowns and everything, that we actually had our best years ever in terms of retention. And this is in a time when, like many realtors, it was illegal to show houses. It was illegal to even attend closings. If you had a deal already like under contract and the closing was scheduled at the title company or whatever, it was illegal to go to that title company and do the closing. So agents literally could not get paid, and therefore they didn't have money to pay us. And our business model was so unique that we had our best years ever in terms of retention in 2020, 2021, 2022, and even here in 2023. So we know that the business model itself of like what is best for the client, if you focus maniacally on that of doing what's best for the client, you don't really have to worry about your own business growth, because like that kind of just takes care of itself if you keep the focus on doing what's best for the end customer. And I think platform has proven that for us, and we wanted to keep that same attitude, that same philosophy with this new venture. So this is a totally new company. It's not just like a separate division of platform. It's just that it happens to share some of the same co-founders, investors, but it's a completely separate company. And we wanted to do something unique and different than what's out there, but with a focus on like what is actually in the best interest of the person buying a house and getting a mortgage. So around, I think it was spring of 2020, we got really specific in hatching a plan of like, all right, what are we going to do to make this a reality? Because this is one of the most regulated industries out there in terms of like the legal complexities and technicalities and stuff behind the scenes. Like you don't just have an idea of, hey, let's start a mortgage brokerage and then open up shop the next day, right? There's lots of legal hoops to jump through and just knowledge of the industry as well. So we decided like one of us who's like a partner at Platform needs to go learn mortgage by being a loan officer, right? We all felt comfortable that we know more about real estate than 99% of people out there, being that we've worked in this industry for so long and we consult with real estate agents on the phone every day, right? We have a really good pulse of that, but knowing about real estate and actually being in the trenches of a local mortgage office are two very, very different things. Like, you know, it's a very specific type of knowledge you have to have. And Mitch is kind of the craziest one of all of us. And so he's like, yeah, I'll leave my job here and go learn mortgage for a couple of years, you know? And so Mitch, I'll turn it over to you here to tell the story of kind of what happened there. But that's basically how we went about like the R&D of JGMC. Is we just realized one of us needs to go do mortgages for a year or two to get that kind of on the ground practical knowledge experience, and then report back to us after a year or so and basically give us like a Lewis and Clark type of report of like, is this viable? What did you find? What did you discover? Should we start a mortgage company? Because at this point we were still open to the idea that like, maybe this is really dumb. Like maybe this won't work for all these reasons. But Mitch is like, yeah, sure, I'll go become a loan officer, get trained and do all that. And so Mitch, you did that. Was it March of 2020?
Yep. So in winter of 2020 to 2021, I took the course, got licensed and all that. And then I went about shopping for a company to train me, basically to learn. And there aren't a lot of companies that want to hire someone with no loan experience. But I found the one I wanted to go to and identified it. And if the guy, Wade Tabor, bless his heart, if he listens to this podcast, he knows I think the absolute world of him. Okay. He's just an amazing guy, but I had decided this is where I want to go. This is where I want to learn. I want these people to train me. And I went after that with everything I had. And that's a story in and of itself that I'm not comfortable telling just yet. But so I got in, started in.
What year was this? What year did you start?
March 2021 was when I actually started at that company. And I was there for about 18 months. I originated about 75 mortgages in the time that I was there. So I didn't like go in and do nothing. Like I was kind of pushing pretty hard, for at least my own standard. I was pushing pretty hard, 75 deals over about 18, 20 months maybe. And I mean, it was rough at first, because there was just so much I didn't know. But once I kind of got my hands around it, I was kind of surprised at how fun mortgages actually were. Because I never expected I was going to be a mortgage guy in my life. I was a real estate guy. I was a licensed realtor when I was 19. Obviously I sold, marketing packages and marketing to realtors. Never in my life did I think I'd be a mortgage guy. And then it pops up. One of us, it would have been a round table if we had an office and we weren't a remote company, but we were on a Zoom call and it was kind of like one of us is going to have to do mortgages.
Yeah. Well, I mean, we are pretty kind of, entrepreneurial, naive, like, optimistic, right? But I think we were grounded enough in reality to be like, hey, if we're going to start a mortgage company, probably at least one of us should know something about mortgages, right? And we're like, all right, who wants to do it? Like, show of hands. And
Tim's like, hey, one of us needs to figure.
Yeah.
And so, Mitch was like, I guess I can see myself doing that. I'll give it a shot. And frankly, it's a good thing he did, because no one else really raised their hand and was like, I'd like to do that. I'd like to leave, my position at a profitable growing company where I finally feel like we're dialed in and things are going well, and start something entirely new in an industry I don't know a lot about, and basically start from zero, start from scratch. Right. And Mitch was like, I'll do it. I think that sounds adventurous and exciting.
Well, and the reason I was willing to is because at some point in 2020, Tim and I were kind of texting and joking with it, because 2020, the world was just like ripped out of the pages of Atlas Shrugged.
What a shit show 2020 was.
Yeah. So yeah, my camera has cut off where I have my Atlas displayed over here. But
hey, please hold up that book again, just once more for the audience, Caleb. Thank you.
And I want to say a couple things. This is hold on, right here. You signed this, Tim, February 15th, 2019, which is my birthday. And I don't know if you knew that you signed it on my birthday, but yeah, you gifted this to me, and I'm thank you.
I think it's become a rule for anyone that I'm going to be close friends with that you have to have read the book Atlas Shrugged. And I've actually told this to like close business associates that, like, if we're going to do business together, you have to have read this book and have a conversation with me about it. And, we have to agree on some basic principles that are derived from this book, because like, that's the lens from which I view life and business, is the ideas that Ayn Rand introduced in Atlas Shrugged. And that's obviously, for those who don't know, that's why we're calling it the John Galt Mortgage Company, because astute readers might notice that neither Mitch or Tim's names is John Galt. But it's called the John Galt Mortgage Company. Well, John Galt is the hero and protagonist, I guess, of the book Atlas Shrugged. And we wanted to name our company after this fictional character, John Galt, because of the ideas and principles that he stands for.
It's certainly an homage. Well, so that kind of gets around to it. We were kind of texting back and forth, and one of us said to the other jokingly, because we were talking about, just Atlas Shrugged, and how the parallels were to take from Leonard Peikoff. The parallels were so ominous on what's happening in 2020 in our country and in Atlas Shrugged. And we're like, well, and we're still brainstorming the mortgage company. And one of us said to the other, what if we named it John Galt Mortgage Company?
We're like,
Parts.
That's the dumbest idea ever.
And then we called each other, and then we talked each other into it over the course of probably a 90-minute call, which we can end up doing to each other pretty frequently.
So at first we were going to call it something like Story Mortgage, because we were, we're like marketers, right? So we have the whiteboard. We're just like throwing ideas of like, what are we going to call this company? And at the time, and probably still true today, I think the mortgage company out there that does the most interesting marketing, or has a brand in any sense, is Movement Mortgage. And I actually toured Movement Mortgage. I think it was back in 2019. I actually went to their like headquarters in Charlotte, North Carolina. I think it's actually technically across the border in South Carolina. But it's a national mortgage company. They've had the fastest growth curve of almost any mortgage company probably ever. And they have cool branding. I mean, they have cool t-shirts, apparel. They're really the only mortgage company out there that I think pays attention to the aesthetic of their brand at all. And so I went and toured their operation. I think that probably planted the seed way back when of like, maybe we start a mortgage company someday. And so we were thinking of all these ideas. I mean, we didn't want to call it Platform Mortgage just for compliance reasons. We wanted it to have a completely separate brand identity, because it is a separate company, right? It's not just part of Platform. It's a completely legally separate company. And I think we had probably stumbled on like Story Mortgage, and we had this super cheesy tagline of like, we'll help you write your story, or be the author of your own story. And so I think we were like grasping at this idea of helping people be individuals and be the hero of their own life, and kind of this self-empowerment idea that is in the book Atlas Shrugged of like, live your heroic life, right? Like, don't compromise on your ideals or what goals you want to accomplish. Like, so we had this idea of story, but it felt cheesy. It kind of felt like, well, anyone could start a company called Story Mortgage. It's just kind of like a cool name, I guess, but it's not really edgy. It didn't leave us fired up to go tell people about it. It's kind of just, well, that's the name of the company. And as a joke, I still can't remember to this day if it was Mitch's idea or my idea, but we're just talking on the phone. It was like, what if we called it the John Galt Mortgage Company? Har, 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 har. And both of us just kind of like ruminated on it for a while and just kind of let that idea like marinate, and we're like, wait a minute. Okay, context here. This is at some point in 2020, right? I don't know when this conversation happened, but at some point in 2020. So we're talking about like peak lockdown hysteria where like companies are starting to like issue these just virtue signaling nonsense bullshit about here's our stance on COVID and we encourage everyone to whatever, wear masks everywhere and get vaccinated. And we fully support everyone being safe and yada, 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 yada. And meanwhile, like platform at the time is sending out mass emails to all of our clients, like, tens of thousands of people on our email list. And we're like, hi, we're already a remote company. So we wanted you to know that our stance on COVID is that nothing is changing. We have no reason to email you this and let you know, other than we saw that other companies were emailing you their opinions of COVID and we didn't want to feel left out. Like, we actually sent kind of like a passive aggressive, cynical email like that just to mock all the other companies that felt like they needed to issue a statement on COVID as if anyone cares.
Yeah, I think you said something on Facebook like, this is a good time for companies that aren't relevant to email their list, reminding them that they're
yeah. So
it's like,
we like did this tongue-in-cheek email blast. Everyone actually got one of the highest open rates we've ever had on a mass email, because we were just like basically making fun of all the other companies that are so on their moral high horse that they think anyone cares about, like, hey, no one cares what Jiffy Lube's commitment to stopping COVID is, or insert company, right? Like, I don't care. And so this conversation happened in the context of the shit show that was 2020, of just, people that have maybe trusted the government their entire life, like in the year 2020 started, I think, to be like, oh, maybe I shouldn't trust every word that comes out of a politician's mouth or these government agencies. And so the idea of the John Galt Mortgage Company, I think, became a lot more real to us in that year of like, what if we started a company with values that explicitly were about like individual rights, individual liberty, entrepreneurship. Like, we are explicitly outspoken about our support of free markets. What if we were essentially as libertarian as Starbucks is woke, or as Disney is woke, or insert example of whatever company that you feel like is woke, which today is most of them, right? We like, what if we actually, with this mortgage company idea that we've been toying with over the last couple of years, what if this company became a contrarian voice in the corporate world that, just isn't woke, and we're actually proactive about what we believe and why we think humans should be free, and we're pro-business and pro-capitalism and for all these things that seemingly corporate America is now against. So I think in hindsight, Mitch is probably hearing me say all this for the first time, because I don't think we've ever really sat back and thought about why we got excited about the name John Galt Mortgage Company at the time we did. It probably had a lot to do with seeing how culturally rotten most of corporate America was in 2020. And so that got us excited about, what if we started a company that was different? We didn't want to name the company something so overt or not offensive, but
don't tread on me mortgage company.
Right. Like, we don't want some just like super duper right-wing conservative-y sounding where it just immediately turns off people that maybe would have given you the time of day if you had something that was a little bit less in your face. So yeah, like, we don't want to name it like
the reality is this: you have two things going for you, and we're like 50 minutes in, you haven't even given the real like home run.
I was planning on doing that
secret.
about 2 hours in. So
Right. So
Oh my God.
there's two things. Number one, you have an amazing name, so you're gonna get people that are like, I'm gonna work with you. I don't even care if I have to pay more. You'll understand what I mean if you read the book, right? I don't even have to pay. I'll pay more to work with you because of what you guys believe in. The ironic thing is, you will get people that are ignorant or even disagree with you that will end up working with you because you guys are so much better than all the other competition. That's what is so exciting about this. It would almost be interesting to do a split test. It's like charge twice as much for the people that love you, and obviously you wouldn't do that, but it's like that's how powerful your brand is, because we're seeing this right now in politics. You're getting people that, like, if they believe what you believe, they'll do anything for you, and you happen to have the best business model that will be hard to compete with. Even if people dislike you, they're gonna end up working with you and trying not to be seen.
Look at a company like
Well,
Chick-fil-A. Like, people think Chick-fil-A is this conservative Christian company. It's like, no, they're not. Like, I think the guy who founded it was a conservative Christian, but I think Chick-fil-A is a public company, right? It's like a publicly listed stock, I think. Maybe it's not, but the actual Chick-fil-A business, the point I was going to make is that it thrives because the product is better than their competitors.
Right.
Like, no one goes to Chick-fil-A and frankly pays more, because like going to Chick-fil-A is probably 50% more expensive than Burger King or McDonald's. Like, they're not cheaper. They're not priced comparably. Like, Chick-fil-A is objectively more expensive than other fast food competitors, but people keep going back to Chick-fil-A because the product is so much it's just so superior. So again, this is why it took us several years to stumble upon the idea of how we're going to do mortgages, because how we're going to do them is actually very different than other mortgage companies out there. We wanted to feel like we actually had something unique to offer people that is better and different than what other companies are doing, so that all of this branding and messaging around, John Galt and our values of like human liberty and individual liberty and free markets and entrepreneurship, we wanted that to be the icing on the cake. Right. But we wanted the actual underlying product to be different than what's out there. So at this point, I'll actually turn it back to Mitch, and Mitch can explain kind of the mechanics about how we're doing mortgages and how it's so different than other mortgage brokerages out there.
Yeah. So Caleb, you mentioned, just as a virtue of the branding itself, you could potentially, charge your biggest fans double, right? But the good news is that if someone works with JGMC, there's a very good chance that they're going to end up paying less or otherwise getting a much better rate than they will at probably almost any other mortgage brokerage, certainly from retail mortgage. And that's simply a function of the business model that we are venturing on, which is, the simplest way to explain it is that we cap our compensation as the originating mortgage brokerage, and once that cap is reached, the remainder is returned to the borrower to put them in basically a different rate environment altogether. It's an automatic buy down on their rate. So if someone, for example, I just priced a mortgage here last week, $600,000 mortgage, and they were locking at a rate that was about 3/4 of a point lower than my buddy's par rate, who is at a retail environment, meaning they were in the mid sixes and we got this guy in the mid to high fives, which is unbelievable. It's like $10,000 worth of benefit going back to the borrower that would have otherwise gone to us or any other mortgage company as compensation for originating the loan. But we figured out that, and we're not super smart that we figured it out all on our own, by the way, but we talked to some people and we're like, oh, we can actually create a profitable business with only getting this much money, on average per mortgage. And so if we were only going to get this much money, X money per mortgage, what would that mean in the grander, scope of what we could do with this company? And what it means is that we can be valuable to clients immediately upon launch. And because we can be so valuable to clients in the highest rate environment we've seen in our lifetimes, right? If we can be valuable to those clients, it means we can also be valuable to the realtors who have those clients immediately. So there's a lot more, to it then there are a lot more applications of having this kind of flat comp model that we're going to be exploring in the future as well.
It's
So
basically
just
almost.
what I'm gonna do is I'm gonna try to re-say what you said, and you correct me if I'm wrong. So a lot of times brokers or banks they'll make money in closing.
They'll make
costs.
the normal amount. They'll make the normal amount.
Right. So and I don't know. Let's just say it's like if you close $1 million home, what would the closing cost be on $1 million home?
Well, so they're gonna make from the lender. They're going to get compensated from the lender like a percentage of the loan amount. And so if that loan amount is say $600,000, they might make 2.5% of that $600,000. We're going to make considerably less than that and return that back to the borrower.
Right. And so the whole concept is you're going to return that back to the borrower in either money, like here's money, or you're going to buy down the rate, or do both. And your guys' whole concept is like, hey, we're just going to play the volume game. Because it's very clear to me, you will lose if you do the same amount of mortgages as the person down the street. But you will win if you do twice or 3 times the amount of mortgages. And because it's a no-brainer, you guys can create more systems. And you might not need the typical, like, you're the mortgage lender, you need to go out and network. Like networking events, like you guys don't need to go network or even market, because there's going to be a moment where people are just going to come to you because you guys are the best. Is that the business model in like the big overview of like the thesis of like
our rates will almost always, and again, like I'm trying to use careful language here so I don't say anything like illegal, because there's so many regulations in mortgage of what you can and can't say, but our rates will almost always be lower than competitors because of our business model. And I say our business model very,
or at least there will be the potential for them to be lower. But if you were to bring me a loan estimate from a guy down the street, I can probably, and you said, I just want you to match this rate. What kind of credit do I get as a result of that? That's when that can be returned to you in money. Or you could apply that immediately as the buy down to put you in a completely different like rate range. So I don't want to get too in the weeds, because that's kind of
right. No, I understand. Are you guys comfortable saying what the flat rate is, or are you guys not comfortable saying
we are basically assuming that every mortgage we do, we're basing our entire business model on the assumption that we're doing like a $200,000 mortgage-ish. And so essentially, again, we're not going to talk about this in our marketing because no one wants to hear the behind the scenes mechanics of how loans are done in the United States. But I know that your listeners, Caleb, on the show are a little bit more financially sophisticated than the average person. So essentially, from a business model perspective, what we're doing is capping our own compensation at the rate at which a normal person might do a $200,000 loan, so that if you get a $400,000 mortgage loan or a $500,000, or Mitch said a $600,000 mortgage loan, that difference is basically just savings for you. And what we do is, most times we're going to use that to like proactively buy down the rate, so that the rate you're quoted as the par rate is going to be, potentially, hopefully 50 basis points lower, 75 basis points lower. There may even be situations where it's 100 basis points lower. So we're talking about someone who might get a 7% interest rate. We could get them something that's 6.5, 6.75. Every situation's different, but almost always we're going to have a much lower interest rate than any other company. And
so
let me finish this, because I'm probably anticipating the question you're about to ask is, what's the catch? Because almost every company, when you see promotions, often from like home builders and whatever, there's, all these special financing terms of, oh, get this super duper special rate. And you're like, wow, that sounds too good to be true. That's way lower than what I see other mortgage companies promoting. And it is, because they bake in other fees to basically earn that money back. There's hidden fees in the closing costs. And sometimes even like with builders, like they just raise the home price a little bit to recapture some of that profit. And then they quote you a really good interest rate, but the actual price you're paying for the house is inflated. We're not doing any of that. We're just capping our own commission essentially on every deal. And in no way are we charging any other fees to like make up the money. The catch is that we just make less money. So like in most of our business model, we make half the amount that a normal mortgage company would on a loan. Like we make half the amount of money, which is another way of saying we have to do double the amount of loans to make the same amount of money that a normal mortgage company would.
I'm not even, or we don't even have an origination, like a broker origination fee that's going to be on the LE, not for our clients. So the only revenue our company will get is the capped commission that we make per loan. And then if somebody's, if your loan amount is high enough to go beyond that, and again, that's basically above a $250,000 loan amount, then the difference between our cap and what the compensation otherwise would be is returned to the borrower.
So is it fair to say if you have $100,000 loan, people could still work with you and you guys may not reach your cap, but they're not getting any.
Then we're still competitive on rate. It doesn't fall within the part. It doesn't fall within the range at which point it would be, we would be uniquely beneficial to them beyond them liking us.
Right. But if you're in a home, like I just want to play both sides because Tim knows I would like to be as objective as possible. So it's like, all right, you're competitive if you have a $100,000 loan. You have $1 million loan. I mean, just it.
Well, let's say 725,000 because that's the conventional loan limit.
Yeah.
Okay, that's fair. And
right now,
part of me wants to ask a follow-up question, but let's say, you have a $700,000 loan. It's like you guys are pretty much impossible to compete with unless someone wants to just win the business. Like you guys are building a model where that's going to be your clients, the people that are like, hey,
theoretically, another broker could compete with us and get them probably a similar rate to us, but that would be them literally making every concession they can to get down to getting them the rate. And obviously I don't know their rate sheet or what their pricing is going to be. I'm just making an assumption here. But at a $700,000 loan, let's just say for someone to get the rate that we would be able to offer them and the same benefit, they would basically have to forego like $12,000-$13,000 worth of compensation, which we're doing every time. But the difference is that, one, we're giving that to you right off the bat. Like we're making that offer with you. There's no haggling whatsoever. That's just the offer you're going to get.
That's our first
offer.
Right.
That's the first offer. And we're not going to haggle with you after that because we're not, we can't exactly beat it. But we're building our business with this as a foundation. So we can do that on every loan because we built our entire business with this as the foundation. If you're going to the guy down the street, it's harder for him to do that on every loan because they haven't built their business with this massive, concession essentially as the foundation of their company. And they're going to fight all the way down to that number. And they probably won't even get to it because it's just not worth it. If they do loans at that rate, they're not going to make enough money to stay open.
Yeah, most mortgage companies, and this is true of many different industries, right? So I'm not like picking on mortgage companies here, but it seems pretty apparent to us in the research, that we've done over the last several years that mortgage companies have a lot of fluff in their business model. There's office managers and regional managers and branches. And it's like, okay, none of that's really adding value to the end customer though.
In the retail space.
Yeah. It's not adding value to the end user who like the guy or, girl who's getting a mortgage, right? Like it's just different ways for you to maximize your sales organization, but all of that adds cost. So I think kind of the point Mitch is getting at there is that most of these other companies that have kind of the legacy old school business model have so many, what we would argue are unnecessary costs in their business model that they have to charge more fees just to pay for all that. So we're trying to build this company from the ground up with the assumption that we're going to operate a lean machine that doesn't have unnecessary layers of bureaucracy, and then pass those savings on to everyone buying a house, and we'll make it up on volume.
Is it fair to say that you guys are going to be on your website, or is going to be very transparent on what your compensation is going to be? Because I know, Tim, when we spoke a while ago, you told me the number, and that's always stuck in my head. But I noticed that you haven't said that. So is there a reason why you haven't?
I have no problem saying it. We built it based on a compensation model of $6,000 as our comp from per loan. And it's more like a $250,000 loan that gets us there. But we will adjust that down for the lower mortgage amounts to be so that there's still some benefit there. But above that, it's a $6,000 origination comp to us, and then everything above that would otherwise come to us is effectively returned to the borrower, either through a pricing credit or being applied toward discount points. But that's subject to change if things change in the world.
Totally. And that's the thing is, and I want to be very clear, like 6 months from now, that's subject to change. And the transparency, which is a buzzword for everyone, but you guys are actually being transparent. If you think about it, like the space I'm in, the insurance space, the mortgage space, like we're not transparent at all. Like the companies are literally built off of like not transparency, which is kind of frustrating. And so that's what I love about you. It's like, regardless if the number stays at 6,000 or goes up or goes down, like you guys will be transparent with that. And I, even being a new home buyer myself, when I heard that, I was like, oh, I would have substantially more money in my pocket if I worked with you guys versus, and I had a great loan experience. It's nothing, no shade to the person that I worked with. It just is like, yeah, I like it clicked right away to be like, that's going to be that business model. Like you guys are going to have a problem because you're going to have too much growth.
The difference, or I guess the distinction I want to make is that number for us of like 6,000 is not, it's not something necessarily that the borrower is paying as like a line item. And so it's not, it's more so relates to the pricing and the rate that they have access to.
Right.
So it's not something that, I don't want to confuse people. We don't want to say, we only charge $6,000 because then people are thinking we're charging them the $6,000 and we're not. And so that kind of gets a little bit, it can get confusing for most
be
home
in any
buyers
for JGMC. Like we're not going to have billboards or ads that say,
and we're not necessarily going to lead with the business model, because I know that if people talk to us, we can just win the business by giving them access to the better rate, right? By just doing what we do. We really want to lead with the brand that we're trying to build, because like I kind of see it as, so 2020 got me into this space where, it just seemed really obvious that the state of the country is that we might have to start building we have to build parallel structures, because people who have the values that we have they didn't want you to be able to go buy groceries in 2021, right? It's like they didn't want you to be able to go to concerts and eventually it's like, well, we don't want people to be able to get mortgages, right? It's like, it's not so hard to see that the world is heading in this place where if you think the wrong things, you're not going to have access to the things everyone else is going to have access to. And it blows my mind that people are sort of okay with that. There are so many people who are just sort of okay with that as a premise. And so we're a mortgage, just to make this abundantly clear, we're a mortgage company for all qualified borrowers who want to work with us. But I want people to have a place that if they have to get a mortgage, where they're like, I want to support a company that is in line with these things.
Like
if
you have ever like gotten a Starbucks coffee on your way to Disney World, and then you're going to go home to the hotel room and watch some NBC News, and just every large company that you interact with essentially hates your values, right? And you kind of feel like, well, I wish there was just one company I could interact with that supports my values, where I know that by sending them money that I'm supporting my values because of what they will do with that money. And we felt like, Caleb, I can't name a large company that supports the values that I do. Like, I can't name one, because I mentioned Chick-fil-A earlier. Super fascinating business model. I think Chick-fil-A actually does like 4 times the revenue per store of the average fast food They have a bunch of really cool things with their business model.
They're franchised by their franchise, and they actually do have some strict franchise
and I think
rules and all that.
if you own one, you can only own one, and you actually have to physically work there. So you can't be like an investor and own 10 of them the way that most McDonald's are owned by investors. And, so there's all sorts of fascinating, I guess, business model eccentricities in Chick-fil-A, but Chick-fil-A doesn't necessarily support your values if you think of yourself as a libertarian or a conservative or whatever.
Yeah.
It's just that the founder of the company is probably leans that way politically. But Chick-fil-A just has really good chicken sandwiches, right? We want to start a company where in our actual messaging, you will see ads from JGMC, the John Galt Mortgage Company. You will see actual advertising that talks about why we love capitalism, why we love individual liberty. Like our goal, kind of our North Star big picture goal, is like a Super Bowl ad in the next 10 years that just talks about the importance of individual liberty and capitalism and all these values that we hold dear. So if you've ever wanted to buy a house and, you're like, I don't really care which mortgage company I work with as long as they have a good interest rate. Like, we want to be an option where you're like, you know what? I would never even consider another mortgage company, because working with JGMC is almost like writing a check to a nonprofit or a charity that I support because they're doing good work in the world. And we just happen to be a for-profit company.
And going back to the Chick-fil-A, which is a privately held company, by the way, is their chicken sandwiches are superior. It's hard for me to say that because I'm like very anti seed oils right now. So it's like when I did eat fast food, I would only eat Chipotle or Chick-fil-A. Those are like the two. And it's funny because Chick-fil-A is not healthier than any other, but it's like you almost feel like it is healthier. And just going back to what you said about the branding and the quality of their food, and all that to say is, yes, it would be amazing to do a Super Bowl ad. It would be amazing to work with companies that share your values. And you guys are just going to clobber the competition because of how you're setting up your business model. Like, that's where, like, you know what I'm saying? Like, that's for me is like, you guys are going to do incredible things because people are going to come to you, even if they don't share your values, because they're like, oh, I'm going to have $10,000 more in my pocket, whether it's directly in my pocket or whether it's buy down and rate. Why? Because I'm choosing you guys versus the person down the street. That's where I think you guys are going to hit a lot of friction, because I think a lot of people are going to be very threatened and hate what you do. And they're going to point to your values and try to cancel you because they're really scared by your business model.
This actually just leads us beautifully into our values. It basically makes the point for us, because one reason I think both Mitch and I and the overall ownership group at JGMC, one reason we love capitalism is that there has never been a better economic system that brings people together than capitalism. Like, capitalism is what allows people who might otherwise hate each other or not like each other to actually work together peacefully, because they both win. Like, if you trade with your enemy, but they have something that you want and you have something that they want, like, capitalism is really the only thing that peacefully allows cultures that don't like each other to coexist, right? And so I think it's kind of beautiful, the idea of thinking of like someone who hates us and everything we stand for and watches MSNBC for 3 hours a night, and they have purple dyed hair and they vote for like Bernie Sanders and donate money to his campaign every year, and they think that we should tax the rich, and they think that the US government isn't big enough and that we should have higher tax rates on everyone, and they've never seen a government program they didn't love. Like, just think of someone who hates basically everything we stand for. And yet if they're buying a house and they talk to a couple mortgage lenders and they get quoted a rate of, I don't know, 7%. And then let's say they talk to JGMC and we quote them a rate of 6.2. Again, like, I'm totally just talking off the cuff here, right? Because who knows what the rates are going to be in every situation. But if you look at the monthly payment of what it would be with JGMC, like, there are situations where we could literally be saving someone $100 or even a couple $100 a month for 30 years in a row. Like, when you look at the compound math of that, of saving potentially hundreds of dollars a month for the entire time you own that house, someone might be like, I hate you guys, but I like money more. And that, to me, that moment right there is so beautiful, because it's like, that's the point. That's why we love capitalism, is that it brings people
And they'll
together.
be on our retargeting list.
And you can send them books in the
Yeah,
mail.
so we actually totally plan on, we're still working through like the logistics of how we're going to pull all this off and not just become a direct mail fulfillment house, but we want to send everyone who gets pre-approved with us a copy of Atlas Shrugged, because I've never seen a book that more just clearly lays out what are the ingredients, what is the recipe for success in a society and a culture than Atlas Shrugged. And when you screw that recipe up, how quickly does culture and society disappear? That's what really Atlas Shrugged is about. So we want to send that book to everyone. So we almost think of the company, and Mitch can share a lot more details on this, but we almost think of the John Galt Mortgage Company as like, yeah, we're going to be a really cool mortgage company with cool messaging, and we're offering people great rates, and we're going to save them money. So it's like disruptive in that way. But it's also disrupting the nonprofit sector, because we feel like we're almost pioneering a business model of a for-profit think tank. Of, we want to spread the word about these ideals of human liberty and individual rights, these ideas that Ayn Rand talked about in so much of her work. But we didn't want to start a charity to do that, because if you read Ayn Rand, you kind of quickly realize it's almost like I don't want to say it's cognitive dissonance, but it almost feels like you're missing the point. If you're like, I want to share or spread the word about why I like Atlas Shrugged, I'm going to start a charity, right? Like, it feels like you should be able to start a for-profit business and do that. And so our marketing budget to promote the company essentially is the outreach budget. We don't cut the world into two different realms of, this is where we make our money and this is where we give it away, right? So we're fully aware that there are some nonprofits out there that sometimes with like a foundation, right, you can gift a percentage of your business or a percentage of ownership into something to a nonprofit, and then profits from a business essentially get paid out to the charity. But that's still basically just an accounting gimmick, where you're still viewing the world through the lens of like, here's where I make my money and here's where I give it away. We kind of are trying to reimagine that paradigm of like, what if the same organization, the same entity, both made money and was a like explicitly a for-profit business. I mean, even our mission statement as a company is actually 3 words: to make money. Like, that's our mission statement, to make money. And again, if you've read the book Atlas Shrugged, you would know exactly where that comes from. It actually comes from Francisco's speech there, as Mitch actually holds up our business model. The mission statement literally on page 1 is to make money. It's 3 words long, because that phrase holds so much meaning and substance. If you've read the book Atlas Shrugged, about what it means to make money, it means to serve people around you, right? And to leave the world a better place than you found it. And making money is just the accounting term for leaving the world a better place than you found it. So part of this too is that we're trying to kind of mix up the nonprofit world.
So, and when Tim's kind of describing all that, that's why when it became evident that someone was going to have to go and do mortgages, it made a lot of sense to me that, like, okay, if it was Story Mortgage or Story Brand or whatever generic, name, I wouldn't be excited about that. But I can get really excited about, starting, running, and, being the face of John Galt Mortgage Company. That's something I can wake up every morning and feel like I'm doing something, we're more than mortgages. And so that's something that's really exciting for me.
Is that your tagline? More than mortgages? Because that's good.
Is it, Tim? Write it down.
That's good.
Actually, I think our tagline is probably going to be, who is John Galt?
Yeah. No,
which, again, if you've read the book, makes all the sense in the world. But if you haven't, you're like, who is John Galt? And that kind of proves the point.
I have it here.
I love it.
Just to provide just a little bit more context on the name, because obviously Tim and I both love Atlas Shrugged, and we came about it in different ways. Actually, for what it's worth, I was handed Ayn Rand by my favorite teacher in high school, who was a liberal with an Obama sticker on her Pontiac Vibe. But she was an unbelievable teacher, and she's like, you should read this. And she did that because she thought it would be good for me, right? And then I haven't shut the hell up about it ever since, right? But in Atlas Shrugged, and I don't care about giving away spoilers because the book is like 75 years old. In Atlas Shrugged, who is John Galt is this just phrase that the protagonist, Dagny Taggart, is irritated with. She hates it when people say it. She doesn't, it's not a person. It's just this phrase that people say, and they kind of say it as sort of an admission of despair, right? Who can know anything? The world is the way it is because it is the way it is. The world's going the way it's going because it is going the way it's going, right? And she just hates it because it basically regards this perpetual decaying state of the world around them. And she basically takes her, transcontinental railroad that she's essentially running, and she wants to use this new special innovative metal, Reardon metal. But no one wants her to use it. They think that it's the worst thing ever. The science is made up actually about how terrible of a metal it is. And so she has to take her line independent, and she names it the John Galt line. And she names it so not because she loves John Galt or anything. She actually names it for the reason she names it that John Galt line for the exact opposite of the reason everyone hates it. She wants to shove the pessimism and the defeatism into the public space, and basically say, no, we control the future. We determine the quality of our world and the way in which it's heading. And we do that with our thoughts and our actions, and we're not going to give the world up to its destroyers. And so for me, that's another reason why I like the John Galt Mortgage Company, because it kind of gives me that spark and that fire because I have been so, over the last several years, so subject to the defeatism some days. I'm just like, oh, the train has left the station and there's not much we can do. But the truth is there's plenty we can do. And one of them is to start a mortgage company in the middle of the worst housing market that we've seen in a long time and the highest rate environment. And I think we're going to crush it.
At the core of the book, and again, why we named the company JGMC, the John Galt Mortgage Company, it's this idea that your life belongs to you. I mean, this is maybe the most radical idea in human history, that your life belongs to you, not the government. Your life doesn't belong to society. Your life doesn't even belong to your parents or your family.
Right.
It belongs to you, and no one can tell you how to live your life. No one can tell you what goals or values to have. You have to figure that out for yourself. And when you do, don't compromise your values or ideals. Like, live the life that you believe is possible. And it's just such an inspiring book, and it's such an inspiring way to look at life. And it's why we're so excited to start a mortgage company inspired by this fictional character of John Galt, because we're hoping that we can inspire a lot of people, across the country and maybe someday across the world to, live their best life and take the ideas from John Galt and apply them into their own life. And we're just using a mortgage company as the vessel to do that.
Guys, I love it. And I really, really appreciate you guys coming on the show, sharing the context, sharing some of the backstory, sharing what you guys are up to. It's been something that I've been waiting and excited to see this actually go public. And I'm very, very excited because you guys will be, a couple things that I just want to say is you guys will be able to make a greater impact through a for-profit business than a nonprofit for everything that you just said, Tim. And I think that's great. And hopefully that inspires some people that are watching that want to make a bigger difference. They might buy into this Unlock Intentional Living and this movement that we're trying to build. And they might think that they need to be a missionary in Africa to make a difference. And there are some people that's what they need to do because they know thyself. But for most people, we need to be the best husbands or wives, the best business people, the best team members we possibly can. And we will provide way more value and good to society and the world, to ourselves, by actually showing up powerfully in whatever we do. And from a standpoint of all the things that you've been up to, Tim, this has the potential to being a massive splash in just the ocean. What this could this do, and just helping change the way that people see their lives and their business. So overall, man, thank you for coming on. I don't know if you guys have any final thoughts. I don't know like what the next step is. But I just want to share that before
there's a couple more.
It occurred to me.
Thoughts.
It occurred to me before we jump off, I should say one more thing, which is, we have to get licensed state by state, but we are currently licensed and operational in South Carolina, Florida, Michigan, Minnesota, Nebraska, because we have a realtor who really likes John Galt Mortgage Company, and the great state of Texas. So we are licensed to do business for about a population of about 75 million people. Georgia is incoming, and then we'll add states as we sort of get off the ground. Obviously, we have to get off the ground. But if someone's interested and they want to reach out, they can reach me at mitchell@johngaltmortgage.com, or johngaltmortgage.com is our website. But we're live. We're ready to help people save a lot of money on mortgages and make ideas awesome again.
I like that. That's so many taglines that are potential. make ideas or mortgages great again. How's that for
I mean, like there are some cool, nonprofits that I think both Mitch and I support, not just emotionally, but also financially. I mean, like I have supported the Ayn Rand Institute, ARI, like FEE, the Foundation for Economic Education. It's a great free market think tank. There's lots of organizations that you can support, or maybe it's even your local church. Some people are very into a certain charity, nonprofit, church, whatever. That's all great, because I think you should invest in things that you value. But what we're trying to do is explore a different strategy for achieving the type of world that we want to live in. And that, what if we started a for-profit company that's explicit aim is to make money for ourselves, save money for our customers, and in doing so, make the world a better place, so that we don't have to give our money away to somehow cleanse ourselves of, okay, we made money, and now the only way to become moral again is to give it away. Like, what if the act of making money makes the world so much, just so much of a better place to live in, that the best way to achieve the world that we want to live in is to grow this company? Because the larger this company gets, the better the world gets around us.
That kind of gets to the thing, because you talked about the annoyance at that phrase, people over profits, that you see people use. And I'm always kind of a little bit annoyed at the, we have to give back, that phrase of we have to give back. But like, I didn't take anything from anybody, so I don't need to give back. I just want to support the things that I enjoy, and support, a good life, and support, good ideas. So anyway.
Yeah, the whole concept of giving back almost implies that you took.
It doesn't almost imply, it explicitly says that you essentially took something, right? And maybe we're nerding out too much philosophically on like an innocent phrase, but I think when people say I need to give back, it really does change people's mindset, like the language you use. And so again, what if growing a company and being as profitable as possible, and like because our vision obviously is within a couple of years we want to be licensed across the entire United States. It's going to be a big company, right? We're not trying to start a $1 or $2 million company. Hopefully in a couple of years this thing's worth $100 million, maybe someday $1 billion, right? The larger and more profitable this company gets, I think the more we're able to effectively spread the message and get people reading Atlas Shrugged and engaging with with these ideas, which we're just so excited about. Caleb, the last thing I want to mention really quick is I'm a history nerd, and my hobby is basically reading books. So one thing that inspired our business model, I should have mentioned this before, is when you learn more about economic history in the United States, you learn that a lot of the entrepreneurs in the time that they built companies were like hated by the elites because they saved people money. Like, people hated Vanderbilt back when he built steamships back in like the 1840s, 1850s, 1860s. So basically like around the time of the Civil War, right? Back when to go across the Great Lakes or big rivers, there was steamships. and the government granted special charters to certain steamship operators. And it made steamship travel very expensive. Only rich people could do it because there were certain operators that were granted monopolies by the government, right? There really wasn't a free market operating. He came in and realized, wait, I can operate these steamships way more efficiently, way cheaper. And at one point, he even started giving free rides away, and he would make money, like break even, by just like selling concessions on these steamships. And he totally obliterated his competition, who only thought the way of doing it was we have to make as much money as possible and have as much profit margin on every deal as possible. And yet people hated Vanderbilt, but to the common man, people loved him because of the amount of money he saved them. And he basically democratized travel in the United States by making travel affordable for the common working class person. Same thing with Rockefeller. You know, if you jump forward 20, 30 years into the future, when Rockefeller hit his peak in the 1880s, 1890s, and into the 20th, century, he brought down the price of, fuel, I think, by 80% in his life with Standard Oil, which meant that if you couldn't afford candlelight or lights, so therefore you couldn't read at home, like you couldn't get better and, buy books for your daughters so that your daughters could learn to read and get a career, right? Like if you care about ideas like feminism, you should love Rockefeller, because he brought down the price of light for a poor or working class family by 80% because he went for volume, and he lowered his profit margin in the short term to make more money in the long term. And, I don't think that we're going to live up to the scale or impact that someone like Cornelius Vanderbilt or John Rockefeller, like how much they impacted society. But that's absolutely the strategy that we're pursuing. Is we're going to make less money in the short term by having a thinner profit margin than almost any mortgage company out there. And hopefully that creates scale and saves people a lot of money, which creates a big impact over the long term.
Yeah.
I love it, guys. I love it. So Mitch, I'm going to put the website down below and your email. Is there any final words that you guys want to share? And by the way, Tim, what you just said is definitely going to be part of the hook, because that was very beautifully stated there at the end. And I think very much lays the foundation of why you're doing what you're doing.
I think we're good. Is there anything else you have a question on?
I mean, I have more technical questions, but that can be for another day.
Okay.
I am excited as you guys
Caleb,
launch.
Do you want to do a part 2 to this conversation where we get into the nitty gritty?
Yeah, no, I would love, because what I would like to do, and so maybe if you're watching, let us know what questions you have. Like, sincerely, please let us know what questions you have about mortgages, and maybe I can get you them beforehand, Mitch, so you can be prepared. But like, I have questions about typical mortgages, jumbo mortgages, how they work, interest rates, state by state. Is it state regulated? Is it federal regulated? The different players in the game. I think it would be really, if we could have a tell-all to the dirty secrets of mortgages. I think that would be really interesting. And I don't want to make this even longer, but I think it would be fun to have a part 2 where we're going into the weeds on all things mortgages.
We could do that, but I definitely want to be prepared for it.
Yeah. I there's a couple of questions I could have put you on the spot. I'm like, you know what? We're announcing. I'm gonna give you 2 weeks to get ready to go.
Really deep and detailed. I'm not even wearing pants right now, so.
Capitalism, right? I love it. All right, guys. Well, Tim, is there any final words that you have, or how can people best support what you're up to in the world?
So obviously check out JohnGaltMortgage.com. If you know anyone who's thinking about buying a house in one of those states that Mitch mentioned. Mitch, can you rattle those off again off the top of your head? It's Florida, South Carolina,
Michigan, Minnesota, Nebraska, and Texas, and Georgia when they decide to process our license in 6 months.
So if you know anyone buying a house soon in any of those states, you are really doing them a favor if you introduce them to Mitch and to the John Galt Mortgage Company, because, we can't make any promises, in print. There's so many like rules and regulations around what we can say about, rates and terms and all that. But in almost every situation, we're going to be able to save people a lot of money on their interest rate. Like the rate you'll be quoted from JGMC is going to just be substantially lower than any other company because
Potentially.
we are knowingly exactly. Thank you for that disclaimer, Mitch. Because we are knowingly making less money. And that's I think the message that we want to leave people with, is that there's no hidden fees or catches. Like, the catch is that we're knowingly making less money in the short term.
One of the fun things is Tim is he's such a marketer and so certain all the time. And so I just have to, it's fun trying to work in, like, you have to have compliance language in the things you say.
When set up and used properly, that's one of my mentors early on told me, anytime I talk about life insurance or anything in general, when set up and used properly, because those are very like, when in the right state, with the right credit, with the right situation, potentially we're going to crush it.
Let me make a promise here that doesn't need a disclaimer. You will never find a mortgage company more dedicated to saving you money than JGMC. It's why we're starting the company.
Nor more dedicated to human liberty.
The beautiful thing about is you can fit a lot of true statements back to back. All right, gentlemen, thank you. And I look forward to going for the ride, and I can't wait for Tennessee to join the list. How do you, if you're in a state that you guys didn't mention, I'm assuming still reach out, let them know that there's interest.
You're in Tennessee?
Tennessee,
not for
man.
long, because he's moving to Florida soon.
Well, that's the next state on my docket. So
perfect. Keep me in the loop. And I was gonna say, another thing is, when grocery stores were closing all around the country, I know a grocery store that probably never closed, right, Tim? Shout out
to Seed to Table in Alfie Oaks in Naples, Florida. We're just so excited, and I want to thank you for having us on the
absolutely
on the show. I know that there's probably many different outlets or media strategies we could have used to announce this, but we were so excited to announce it here because I know what you stand for, Caleb, and the values that you guys have at BetterWealth about always putting the client first and doing what's right for the people you work with, knowing that means that you'll be able to build a successful, resilient business over the long term. Those values completely align with what we're trying to do with JGMC and what we've done at a platform. And so it just felt like a perfect fit to make the announcement here. So thank you for allowing us to do this. I think it's going to be really exciting to see what happens as we grow this thing over the next couple of years.
The honor's mine, and thank you so much for coming on. I know when I heard that you guys were close to announcing, it's an honor to have it be released here. So, all right, guys, thank you, and look forward to seeing where the future holds.
Thanks, Caleb.